to that. So there is, of course, trend. We'll see if there is any follow-up. There are stocks from yesterday, Delta, etc., also in a fair bit of focus. But
I think till the market opens, it'll be more stocks. But till the RBI policy, it'll be more stock specific.
It's happened so many times till the RBI policy, the market absolutely flatlines and then picks up a fair bit of pace. So here we go. The open is on your screen. We are starting at about 22,006 on the Nifty. And you've got the Sensex, which is starting in the positive as well as a 0.25% higher start, 1/3%, picking up about 60 points is what it translates into. 21,984. The Nifty Bank is up about 1/3%, which is 160 points higher. So the Nifty Bank yesterday ended higher and it's got some gains this morning once again. Let's toss it across to Sonia, who's got more rates on the wall. Sonia.
Oh, thanks for that. Well, it's a good opening for the market, as you said so yourself, up about 0.3% on the index. The Nifty Bank is up 160 odd points. Let's take it straight to some of the banking stocks, right? You have SBI that's at a fresh record high. It was at a record high yesterday, and it's put on some more weight this morning. So look at that, 1.5% higher. In fact, the entire PSU pack is looking pretty good this morning. IndusInd Bank as well is the other one that's gaining ground, up almost about 1% as we speak. But let's also take it straight to some of the result reactions. The two good numbers that we had came in from Lupin and Tata Consumer. So let's take a look at how it did there. Lupin's numbers were very strong on the top line. The margins have been a big beat as well. Lupin is up almost about 3.5%, but Tata Consumer Products, despite a decent set of numbers, the stock is down almost about 2.5% or so. So these are a couple of the large caps that have reported good numbers. In fact, talking about good numbers, you also have the likes of Uno Minda, etc., that could be in focus after a decent set of numbers that the company has reported. Apart from that, KEC International, there's an order win over there, so 4% higher on that stock. Keep an eye out on KEC International. And, if you're looking at the Nifty Bank, that's really the one that's taking the market forward. Look at it, 182 points in the green for the Nifty Bank, up almost about 0.4%. Many more stocks in focus. Power Grid is up almost about 3%, a result reaction over there. And Trend, remember, Motilal Oswal has put out a fresh report on Trend, expecting a bigger upside from here on, despite the kind of rally that we've seen. They have an over 4,500 price target there, and Trend now up almost about 2% on top of the rally that we saw yesterday. A couple of other large caps in focus. IT stocks have been piling on the gains for the last couple of days. The Nifty IT index as well as key stock. The IT index is up another 0.5%. So both IT and banks are contributing today, which is the good thing in market opening. And some of the IT names should come up for you on your screen. In terms of more result reactions, Cummins was a big standout performer in terms of results. So Cummins is up almost about 2.5% right now. Volumes are picking up over there. Manappuram Finance also saw a very strong improvement in terms of its net interest margins, which came in at a 10-quarter high. However, the street is a bit disappointed with some of the other internals. So Manappuram Finance down almost about 3.5%. A couple of final stocks on my radar. Inox Wind. There is a fresh order win for Inox Wind. So that stock is up, I think, over 3.5%. It should come up for you. And Inox India has been gaining quite a bit of ground as well. So let's just take a quick look at that stock. Apollo Tyres, by the way, it is coming under some profit taking because, as I mentioned, if you compare it to its peers, the revenue growth has hardly been 3%, while a couple of its peers like CEAT have done almost 9%. So a little bit of profit taking is what you're seeing. But otherwise, guys, the market opening is solid, led both by banks as well as the IT space. So there's leadership coming in from both ends.
Well, some part of the market will be looking in at the RBI governor to see whether or not this is a hawkish or a dovish skew. And the other end of the market will be looking for commentary on Paytm. Just take a look at that stock. You pull up an intraday chart. That's what I want up for you on the screen. The way the stock has, come off the day's high, the high was around 530 rupees. The current price is around 460 rupees. So in a matter of around 3-4 minutes, the stock has corrected more than 10% from the high point of the day. The intraday chart of Paytm should come up for you on the screen. And that's showing a sharp drop from the high point of the day. So someone has just cashed out. Remember, the low that it made was around 400 rupees. It danced away to around that 530 odd mark. But Paytm is a stock that's taken that sharp drop after opening up well in the green. Besides that, PM Narendra Modi yesterday spoke about LIC, and that's, got the stock excited as well. Besides that, you have valuation support, you have higher deliveries as well that have been seen in the last few days. And there's a dividend that the street is anticipating. Now it's almost 1100 rupees stock. So all the IPO allottees as well will be happy as the stock makes a fresh all-time high. What else? Last night we had Mangalore Chemicals and Paradeep Phosphates. They announced that merger. For Paradeep Phosphates, they're getting a good asset. The EBITDA number could go up by roughly around 20% on FY26 estimates. And for Mangalore Chemicals, the reason that the stock is up is because the merger ratio is in favor of them. So both those two stocks higher in today's trading session. IRDA, that one had a good rally to around 215 rupees. From the highs, that stock is corrected close to on 10%. The last time I checked, in fact, it was down close to on 5%, so no exit out there. Sugar stocks, we highlighted earlier in this week that there was some delivery-based buying being seen out there. And smaller sugar names like a Bajaj Hindustan, like a Shakti Sugar, both of them are some of the top volume gainers in today's trading session. Balaji Telefilms, for a second day running, full of Shakti Sugar as well as Bajaj Hindustan, both of them did quite well. Balaji Telefilms, they'll be considering some kind of a fundraise. So that stock for the second day running is up close to around 13%. And Jyoti Structures as well, the stock that's moved one way from around the 10-15 rupee mark to around 30 rupees. Yesterday as well, they won an order. So that as well is coming up as one of those top volume buzzers in trade.
Okay, so that's the overall picture. 65 points is what we have on the Nifty. And we're at about, just sort of ticking into 22,000, exactly 22,000 on the index right now. A few more names. Yes Bank is the biggest volume-led gainer. By the way, it's up 50% in the last 4 days. Yes Bank. Stocks at 32. This is sheer momentum. I mean, sheer momentum. Gains beget gains, and that's what's happening here. SJVN is up 4%, 153 on SJVN. Power Grid, of course, Vivek mentioned the numbers, 5% higher. LIC is up about 3.8%, 1,085 on LIC. It's got very large volumes. There is Kalyan Jewelers, which is up about 2.5%. Bank of India is up 3.5% right now. HBL Power, it's crossed 600, and what a performer! Some of these names like HBL Power, Genus Power. Of course, HBL reported numbers, and numbers were strong. 610 on that one. It's going, and how? Shakti Sugar is up about 13%. I'm not sure there are any other sugar names. But Utkarsh Small Finance Bank is coming up with a 3% pop. There is GIC, RE, it's PSUs, really. Insurance, right? I mean, I mentioned LIC, but look at GIC. GIC is up 6%, 428 on that one. That's a reinsurer, by the way. And look at New India Assurance. New India Assurance is up 9%. Actually, if you can pull up these three public sector insurers, GIC, New India, and LIC, quite something. Gensol, which has been moving circuit to circuit, 10% on top of 10% every day. It's a slower start for it, 2% higher right now. So this is a very vibrant market open once again, which is coming through. IOB is down 4% and UCO Bank is down about 5%. These were up 15-20%, these two names yesterday. So there is a bit of a pullback which is there. But far and few in between. Otherwise, mostly it's up. Zaggle went up sharply. I think 17% yesterday after numbers beat expectations. And Zaggle is seeing a small pullback of about 5%. The other big mover yesterday was EIH, which was up almost 20% by close yesterday. That is seeing a small 3% pullback. But keep an eye out on these names because, things can turn. And Sobha is down 6% as well. I'm not sure if there's any news flow. But Sobha is taking a bit of a cut on large volumes at this point of time. So at 6 minutes into market open, we have Andrew Holland, Chief Executive Officer at Devendus Capital Public Markets Alternate Strategies. Andrew, great to have you with us here. Thank you very much for your time. I mean, if it's momentum that that one is chasing, I mean, then you got to do it to the exclusion of everything else because you can't mix things up. A little bit of fundamentals, a little bit of momentum. That won't work. You either go with the simple price action, which is momentum, or you look at fundamentals. Is there a way to marry the two, in your opinion, in terms of what you're seeing out there on the screen, Andrew?
There is actually, but I think what you have to do is if you take in any sector, which companies you believe are going to do well within their own sector, and therefore if you get that earnings surprise, which you've been seeing, either on the positive or negative side, that's what's going to be the share prices because thereafter. So you got the fundamentals right, you got the right company, it's doing well, it's going to exceed the analyst expectations, which means that the analysts then have to upgrade their forecasts or downgrade, whichever it would be, and the market's both rewarding and punishing those companies, where the fundamentals have not played out as strongly. So you get that extra momentum in that. One, the analyst is going to upgrade the share price along with the earnings. So the first point is you get that let's just say a company's earnings forecasts are increased by 10%, you get that initial pop of 10%. And then, of course, you go above that because the momentum of the stock is going to take you much higher than the analyst forecasts, who then the market would believe could also be conservative at that point.
Okay, well, the space to be in this morning undoubtedly is insurance. Just look at all the stocks. GIC is up about 9%. New India Assurance is up almost 12% right now. LIC is up about 4%. So this space is really buzzing. Don't lose sight of that. Huge volumes as well. And Yes Bank is the other one, by the way. 7% higher, massive volumes on Yes Bank. A big comeback, actually, for Yes Bank this year. This year, it's up almost 50% already, and we're not even done with the 2 months of the year. So that's a big comeback there. But Andrew, hi, good morning. There are many things to watch out for, right? There is, of course, the RBI policy today. There could be a dovish tone there. There's the election season that we're getting into. So momentum is very strong in the market. Is there any caution that you're expecting to hit the system, or do you think that this could be a clean runway on the upside?
Clean runway is always always fraught with danger to my mind. But listen, the RBI. Let's start with the RBI. The budget, to my mind, apart from the normal expenditure by the government, it was very bond dovish in terms of the government borrowings being lower. And of course, we've got the bond inclusion in JP Morgan's indices coming up as well. So that tells me that bond yields will probably fall below 7% very quickly. So with the RBI, what would they do? I mean, they're not going to be over hawkish, right? Because you've got a Federal Reserve which has done a pivot. I suppose where I'd be looking for in this policy is how they're going to accommodate some of the tight liquidity. Maybe there's a CRR cut. To help the banks through the fact that it is borrowings are quite high at the moment, and because the government's got a lot of cash, so that's what I would look for. If that happens, then the banking sector might breathe a huge sigh of relief, and we could see that being the next kind of leg for the market, because the banks have been underperforming quite considerably for the last 6 to 9 months. So this at least would be some rally for them, or relief for them in the very short term. But otherwise, if it's not, then I think the banks remained under pressure.
All right. Hi, Andrew. Good morning. Good to see you. Andrew, I think in the past you've been quite positive on the travel and the entertainment space. In fact, we had the management of TTK Prestige who joined us yesterday. They said the share of wallet, he's not seeing so much of traction on his sales because he believes a larger chunk is moving towards travel. And there are a lot of stocks out there that are doing well. I had a chat with one management yesterday as well, who we'll be presenting it on the channel later on. But what's your view now? These stocks have run up. Still more headroom?
Yeah, no, I think so. I don't think travel is going to be something which people are going to delay at all. I mean, I think if anything, it's more travel that you're seeing. If you speak to all the hotel companies, margins are improving. We've got some new listings coming as well. So again, that will give us some flavor on what they're saying. But I think overall, when you get to this, 2,500 per capita GDP, then people start spending more money. And I think after COVID anyway, there's a trend. So I don't see that going away without the very start of a long runway for the hospitality industry. And I was at a wedding at Sula over the weekend, and they were saying that at the recent holiday, they had over 2,000, 5,000 people again visit just for the day. So travel, experiences, it's going to be something that's going to stay with us for a number of years.
And I think even there, right, travel, we were earlier talking, before you came on, Andrew, we were talking about the push from for the PSUs from Prime Minister Modi. Although I don't think he also would have expected this kind of rally, but he took stock of the big gains in PSU stocks and travel, tourism. I think with, of course, what has happened in Ayodhya with the Ram Mandir, or, for example, I think he made a sort of comment about get married in India. I mean, as a theme, as something which people should consider instead of spending money abroad, overseas, and destination weddings, etc. Choose destinations here in India. it's a very powerful kind of theme that he's picked on because it's a huge expenditure annually. I mean, the entire wedding industry. And that, of course, spurs everything, the entire ecosystem, which is, hotel accommodation, travel, etc. So take your point there. Any specific trades, Andrew, that you want to talk about in terms of what can work from here tactically?
So I just want to highlight this, that the bumps along the runway, which Sonia had mentioned, is that, I'm seeing a lot more noise coming from the commercial real estate in the US. You saw it with a regional bank, you saw it with a Japanese company, financial company having problems with properties. And I saw, a REIT company again halving its dividend. So I think just be careful on the commercial real estate in the US. That has the potential to kind of bring markets down if that was to be the case. I mean, we see what's happening in China in terms of their property. So I think it's something that could kind of stall the kind of strong rally that we've seen. But that said, I mean, what are we doing in India? Basically, we're kind of not avoiding the banks, but we're being very cautious on the banks. Whereas we'll wait to see what the RBI does today. But the favoured sectors, remain a little bit more towards IT, metals, because we do expect China will do some stimulus to get the property market stabilised, and that will be good for the metal industry overall, or metal stocks. And that's really about it. Whenever I look at kind of new names, Prashant, I just look at the share price, and they've all run up so much, and it's just. I just feel a bit wary kind of chasing markets. I know the momentum's there and you keep with it, but chasing new stocks or new avenues of growth is I think a little bit fraught with danger at this point.
All right, chasing new stocks is fraught with danger. Got it. There doesn't seem to be any danger in the market though. The mid-cap index is up 350 points, but I take your point. I mean, it's better to just, exhibit some caution at higher levels, especially when anything and everything is rallying. So that's something to be a bit cautious about. But let's do one thing. Let's talk about some earnings now. Uno Minda reported a very strong performance. It is one of the strongest stocks in the auto ancillary space. A healthy surge in revenues and profitability. Their margins contracted a tad bit, but the company has received new orders having an annual peak revenue of 250 crores from the EV space particularly. Sunil Bora, the Group CFO at Uno Minda, joins us now to talk about that. Sunil, hi. Always great speaking with you. In 9 months of FY24, the revenue growth has been 23% now, and you're sitting at a little above 10,200 crores. Can you tell us what is the expectation for the full year, and what are we looking at in terms of FY25 growth?
Yeah, Sonia, thank you very much. So in terms of full year, we are expecting the momentum to continue, and if everything goes well, we should be in between 13,500 to 14,000 crores of consolidated revenues. But if you see at a group level, we are much more. So our group level, our last quarter revenues were roughly 4,500 crores. We have some joint ventures because of which revenue does not get consolidated. So that's why what you see is what we have majority subsidiaries and majority control of the board. But there are some entities like TG, Denso, etc., where the revenue is not part of top line. So we are seeing a very healthy growth, and this year, as I said, 13,500 to 40,000 crore of top line for the group consolidated numbers, and overall maybe around 17,000 crores of top line. Moving forward to next year, as you know that Sonia, we normally don't comment on annual numbers because large part of our revenue, almost 92% of our revenue, is linked to the OEM revenue, which is the line fitment, and our destiny is linked with the industry volume. So we normally don't comment on the industry volumes, but our endeavor continues to be whatever industry grows, how do we outgrow the industry by at least 1.5 times over medium to long term. In fact, if you see past many quarters, many years, we have done much better than that, and hopefully we should be able to continue that in the near future as well.
Okay, so you're saying that 13,000 to 13.5 to 14,000 crores of consolidated revenues by the end of FY24, and you will outgrow the industry by 1.5 times in the medium to longer term. Got it. This quarter, your margins contracted a bit, but this was also because of the ramping up phase of your new facilities. Do you stick to your guidance of 11% margins in the near term, and is that your outlook for FY25 as well, or do you think you have more margin levers?
Absolutely, Sonia. We are sticking to our annual guidance of 11%. In fact, for 9 months also, we have delivered 10.9, and hopefully, if everything goes well, we should be touching 11% on a full year basis. And even going forward in the near term, we are sticking to our target of 11 plus minus 0.5%, and with a bias towards a little bit of positive in the medium term.
Sunil, hi, morning. I just had a slightly broader question before we get into individual segments like lighting, etc. And as we discussed this earlier as well, there is some, while the road to electrification is inevitable, is what's going to happen. But along the way, there are going to be speed bumps. We had the largest, pure electric vehicle maker in the US slowing down once again. I'm talking about Tesla. Some of the European EV makers are also starting in conference calls, etc., starting to talk about how growth is plateauing out a little bit. Is that having any impact on visibility for you, or not at all?
So Prashant, as you know, that large part of our businesses are agnostic to the vehicle engine, whether it's ICE, hydrogen, EV, whatever, right? You have seating, you have switches, you have lamps, you have wheels, you have blow molding, airbags, infotainment, etc. So a lot of these products you need irrespective of the energy vehicle runs on, right? And on top of it, we have built a EV component profile specifically targeting two-wheeler and three-wheeler segment. And we are not yet have a clear strategy communicated on what we are going to do for PV, which is in the works. So as of now, two-wheeler, three-wheeler, we are still continue to be bullish. And if you remember, in May, our penetration for EV two-wheelers was specifically roughly 3.5%. There was a dip because of the drop in the FAME subsidies. But again, markets have picked up. And last quarter, we are almost around 4%. And the direction looks positive because there are a lot of our customers who are working on launching EV two-wheelers in the next 12 months. We are quite optimistic that it might actually be a very aggressive growth as we move forward. Little different maybe from the PV segment, because as of now, we all know PV is not that much entrenched into EV, because the volumes are roughly 70,000-80,000 cars a year. So there, I think there is a time to go, but we are actually very bullish on two-wheeler and three-wheeler segment. In fact, three-wheeler is even doing much better than two-wheeler, you know very well, right? It's almost 30-40% penetration.
All right. Hi, Sunil. Good morning, and always good to see you in. And we've got a couple of numbers from you this time around. So clearly business is in an upswing and you're sounding far more confident. Let's focus on a couple of segments then. Your lighting business. Out there, I think you're doing currently around 850 crores on a quarterly run rate, and you're aiming to double this. Tell us on a yearly basis, how do you see this trajectory move? And also on seating, roughly, if I annualize the number, you're doing around 900 to around 1,000 crores, but you want to get to around 1,500 crores. That happens in the coming fiscal itself?
Yeah. So two questions. One is lighting. Definitely, we are working on very, very aggressively on our lighting segment, specifically on the PV segment. We have last year commissioned our new plant in Gujarat. We are currently in the construction phase of our new plant in Pune. So lighting as a segment, specifically for four-wheeler, we are very, very bullish. We are looking at market share gains moving from 14-15% to almost 18-20% in next 4 to 5 years, coupled with the kit value growth, which is significant when you move from halogen to LED. So we are looking at multiple times growth in next 5 years in the lighting PV segment specifically. And in seating, we have given target of 1,500 crore revenue doubling in FY26, which was 5 years from the acquisition. But we are working to see how we can prepone that. There have been some headwinds in terms of the exports. There have been some small softening in exports volume, and also some stabilization in CV volumes. If everything goes well, definitely we are looking at maybe hitting that target 6 months before our committed timeline.
Okay, that's very interesting. You're saying the lighting segment market share will go from 14-15% to 18-20% in the next 4 to 5 years. Nigel also asked you about the revenue run rate, right? You're now sitting at 800-850 crores. Just in the last 2 quarters, you've sort of scaled it up in the lighting business. Is there possibility to scale it up to perhaps 1,000 crores per quarter as well, given the kind of momentum that you're seeing? And if yes, by when?
Absolutely, Sonia. It can actually be more than 1,000 crore run rate, maybe sometime in the next quarter itself.
Okay, wow. More than 1,000 crore run rate in the lighting segment in the next quarter?
Next year.
In the next financial year. Okay, got it. I also wanted to talk very quickly on the EV business, because, your EV run rate has also gone up. I think a couple of quarters ago, you were doing 60-80 crores. Now, per quarter, you're doing about 160 crores of sales to two-wheeler EVs. Is there scope to take that up to 200-300 crores in FY25?
A lot, Sonia, depends on the volumes of EV because this market is still in the nascent stage and it's stabilizing. Even everybody is looking at what is going to be USP. But if you see from Uno Minda perspective, our as I said a little while back, the EV revenues of two-wheeler is roughly 4% of the industry volumes. Whereas if you see from our perspective, our revenue is in two-wheeler segment is more than 10%. That clearly depicts our ability to put more components from EV perspective, EV specific perspective into our customers, and that's how we are seeing that kind of outperformance and the significant growth we have. And if everything goes well, the numbers you spoke about, hopefully we should be able to touch in the next fiscal year.
Okay, we'll leave it at that. Sunil, thanks a lot for joining in. Your optimism sort of is coming through the screen. We can see, we can see the numbers as well growing quite a bit. So all the best for the future. That's Uno Minda, very strong numbers coming through. And their guidance, they're very bullish on the lighting segment at the moment. They say they'll outgrow the industry by 1.5 times over the medium to longer term.
Sonia, I just want to mention one specific stocks. Look at Max Financial Services. It's a stock that we highlighted yesterday, and that was largely on the back of the approval which they've got for Axis, for taking on Axis Bank and the transaction from Axis Bank, where they're going to buy, what they agreed to buy at a much higher price. So the reaction yesterday was on the back of that. But then towards the fag end, of the closing minutes of markets yesterday, the insurance numbers came through. Monthly insurance numbers for life insurance, and Max numbers were very strong. We highlighted that right towards the close. And look at Max Financial. Within an underperforming sector, this is the underperforming stock. So in that sense, there is room if you just, on a relative kind of basis, and you're seeing very strong moves coming through there. 1,000 plus, back 4 digits and above on Max Financial. More on this a little later. We'll take a quick commercial break here. We'll come back, but there's more coming up in just. All right, I think what we'll do is Shilpa Raut is with us to run us through what she's making in the market before we kind of get into the RBI programming bit. Shilpa, welcome back. Good morning. How are things looking? Just a quick assessment of the indices and any specific stocks on your radar.
The indices are completely, in line what we discussed in the morning. 22,000 now holding well in futures. You can have a stop loss at 21,900 and stay long for targets of 22,200 to 300 zones. And Bank Nifty, again, in futures, it is trading above 46,200. So their stop loss should be 46,000 and look for targets of 46,700 today. And stock specific wise, I have 2 buys. One would be a buy in Oro Pharma. Oro Pharma futures trading at around 1,025 right now. It's looking very well with a stop loss of 1,010 from here. Look for targets of 1,060 to 1,080. And the other one would be a buy in Tata Communications. Tatacom also futures trading at around 1,730. Keep a stop loss of 1,715 from here and look for targets of 1,760.
All right, Shilpa, thanks very much. We'll have you back with more in a bit from now. But what we'll do is we will take a quick commercial break here. On the other side, we will get to our RBI policy coverage with a whole host of guests, experts on what to expect from the RBI. We'll know that in about 20 minutes from now. That's the panel you'll see in just a bit on the other side of this break. Stay with us.
everyone, welcome to our monetary policy special coming to you straight from Mint Street from the Reserve Bank headquarters. It could be an eventful day. The expectation is that the Reserve Bank will probably solidify in policy what it seems to have done in the last 5 days. What did it do in the last 5 days? It gave a little more liquidity, 2.5 lakh crore to the market, bringing down the call rate from 6.75 to 6.5. Now the call rate has to remain at the repo rate, which is at 6.5. So the hope is, will Reserve Bank be steadfast in keeping the call rate at the repo rate of 6.5? Will they in any way in their tone show that tendency in the coming months also? Well, that's the expectation, but there's much more to discuss. I have with me my colleague Ritu Singh joining me from the CNBC-TV18 studio.